Welcome home sellers and future real estate moguls. Today, we're diving into a topic that can save you thousands, if not tens of thousands of dollars when selling your property. How to legally avoid paying capital gains tax. Yes, you heard that right. We're talking about keeping more of your hard-earned money in your pocket by meeting specific IRS requirements. Now let's get straight into it. So, what exactly is capital gains tax? In simple terms, capital gains tax is a tax on the profit you make when you sell an asset, like real estate, for more than you paid for it. When you sell your home, you might be hit with this tax on the difference between your selling price and your purchase price. But here's the kicker, not everyone has to pay this tax. That's right, there are legal ways to avoid it. Stick with me as we break down the details. Now, let's talk about who qualifies to exclude this tax. The IRS has something called the primary residence exclusion. If you meet certain criteria, you could exclude up to $250,000 of the gain from your income if you're single, and up to $500,000 if you're married filing jointly. That's a huge amount, isn't it? To qualify, you need to meet two main requirements, the ownership test and the use test. The ownership test means you must have owned the home for at least 2 years. The use test means you must have lived in the home as your primary residence for at least 2 out of the last 5 years. Imagine, you buy a home, live in it for 2 years, move out and rent it for the next 3, and then sell it. You still qualify. Amazing, right? So, how do you calculate your capital gains to see if you qualify for the exclusion? First, you need to determine your adjusted basis. Here's a simple formula to help. Your purchase price plus the cost of any improvements you've made minus any depreciation you've taken equals adjusted basis. For instance, if you bought your home for $300,000, made $50,000 worth of kitchen renovations, and took $20,000 in depreciation, your adjusted basis is $330,000. If you sold the house for $500,000, your capital gain would be $170,000. With the exclusion, you wouldn't be taxed on that $170,000. Want to maximize that exclusion? Documentation is key. Keep all receipts and records of any improvements you make to your home. This can greatly impact your adjusted basis and, in turn, your capital gains calculation. Plan ahead. If you know you're going to sell, think about the timing. Try to ensure you meet the use and ownership tests without any gaps. Now, what if you're married versus single? If you're a married couple filing jointly, you can exclude up to $500,000, but both spouses need to meet the use test, although only one needs to meet the ownership test. Special cases include military personnel, foreign service members, and those moving for work. For instance, if you're in the military and get stationed somewhere else, the IRS cuts you some slack. You might still qualify even if you haven't lived in the home for 2 out of 5 years. But what if you've lived in the home less than the required period? Don't worry, you might be eligible for a partial exclusion if your move was due to a change in employment, health, or unforeseen circumstances. What happens if you don't qualify for the exclusion? Sadly, you'll owe taxes on the full gain. This can be a hefty amount and should be prepared for in your financial planning. But knowledge is power. Understanding your potential tax obligations can help you gear up financially and possibly mitigate some of those taxes through other legal strategies. Preparing your home for sale goes beyond a fresh coat of paint. Declutter, stage your home to make it look spacious and inviting, and fix any minor issues that could turn off potential buyers. Also, avoid common mistakes like overpricing your home or neglecting necessary repairs. These missteps can bog down the sale process and potentially impact your eligibility for capital gains tax exclusion. Here's a quick recap. Capital gains tax can be a significant burden, but by meeting the IRS's primary residence exclusion rules, you can legally avoid paying it. Make sure you meet the ownership and use tests, document all your home improvements, and plan ahead. For those in special circumstances, understand that you have options and sometimes exceptions apply. It's crucial to consult with a tax professional to fully understand your unique situation and navigate this process smoothly. Avoiding capital gains tax legally can make a massive difference in your financial well-being. So, are you ready to sell your home and keep more money in your pocket? Leave a comment below if you have any questions or share your own experiences with capital gains tax. Don't forget to like, subscribe, and hit that notification bell so you don't miss more valuable tips on managing your finances and maximizing your investments. Thanks for watching.